So, of course, we've seen these downgrades just this week from the IMF, which makes me wonder if there's further downside risk to your estimates of demand, or are you already up to date with what the IMF is currently saying?
In the last IEA oil market report, which we published on Friday morning, we did actually downgrade our expectations for oil demand growth. The headline figure was down by 100,000 barrels a day for 2019 and indeed 2020. Of course, we had to some extent anticipated a downgrade from the IMF without knowing exactly what the full details will be. But I think what the IMF numbers are doing is confirming a picture that we've seen as 2019 has developed. And we are now looking at a possibility, I say no more than that the demand growth outlook could get a little weaker. We'll just have to wait and see when we run the final numbers. But it's not just a question of the IMF numbers themselves. There is, of course, real data from the oil market as we go through the year. And in the second half of 2019 so far, early data has been actually stronger than we might otherwise have thought. So the jury's still out as to whether we are definitively going to slash oil demand growth any further.
Okay.
How elastic is supply, Neil? I mean, when we saw the attacks on Saudi Arabia, there was a brief spike, but really prices came under control quickly, and it makes me think that certainly in the shale areas of the U.S., but in other places around the globe too, it's really easy to ramp up supply to meet demand. Is that the case?
Well, I think that the issue with the attacks on Saudi Arabia was that the initial fears that we had, that it was a very severe disruption that would impact oil markets materially for a very long time, those fears turned out to be misplaced, because Saudi Arabia did a very impressive job in dealing with the disruption. They managed to maintain supplies to their customers. So that was impressive, and that explains why the oil market was able to adapt and prices fell back to pre-attack levels relatively quickly. Now, the issue of the wider issue of supply from elsewhere is very important, because a second ago I was talking to Anna about the possibility of oil demand growth estimates being reduced as we head out to 2019 and into 2020. While we're thinking about that, what we're also seeing on the supply side is an expectation of a wave of new supply growth from the United States, which will continue to grow at fairly impressive levels. But crucially, we're also seeing very big expansions in production next year from Brazil and Norway, and to some extent Canada. So demand growth, the jury is out on where that's heading, but what we're pretty certain of is there is a lot of supply coming into the market, and that suggests that the OPEC countries and Russia, who is working with them to manage the oil market, they will face a serious challenge as we move into 2020 to keep prices at the level with which they feel comfortable.
How much geopolitical risk do you think is currently in the price, Neil? Because, you know, we've seen prices, as Matt said, the spike didn't last long. And as you've said, the Saudis restored capacity quite quickly, or took a lot of steps towards that. And we saw prices drop quite quickly. So the spike wasn't long lasting. But we surely are more aware now of the vulnerability of the Saudi infrastructure.
Well, yes, but and it is, in fact, in some respects, quite extraordinary that the price didn't initially rise higher than it did. But I think that one of the main reasons for that is, number one, we established that the attacks weren't quite as devastating at first thought. But secondly, the world has in reserve a very, very large volume of oil stocks. There's 3 billion stocks in the OECD countries. There's probably up to 1 billion or so in China. We have another 1.5 billion barrels of stocks, of emergency stocks. So there is a lot of stock out there, which in theory was available if necessary. Of course, in any emergency, the market, the private companies are the first responders, if you like, and the market did swing into action with the Saudis leading the way, and in the end we didn't need the emergency stocks that the IEA manages. But you're right, the attacks were very significant. Without being an armchair general, you sort of think, well, maybe they could happen again, but the market seems, for the time being at least, content that a serious disruption can probably be dealt with by the market. But of course, we don't know by the nature of these things.